South Korea's central bank has raised its benchmark interest rate once again in an effort to tame soaring prices. However, the Bank of Korea is slowing the pace of its monetary tightening, announcing a hike of the minimum 25 basis points due to lingering economic uncertainties. The central bank also forecasts South Korea's GDP growth for the next year to drop below 2%. Choi Min-jung with this report.
The Bank of Korea has raised its key interest rate for a record sixth consecutive time, this time by 25 basis points. With the latest hike, the country's benchmark interest rate now stands at 3.25%. The BOK says the decision to increase by a smaller margin compared to October's 50 basis point hike is due to an expectation that the U.S. Federal Reserve will raise rates at a slower pace, as well as exchange rates becoming more stable. However, the hike still comes amid an effort by authorities to tame soaring inflation. In October, prices rose by 5.7% compared to a year ago, much higher than the central bank's 2% target. And while the central bank forecasts consumer prices to drop as the economy slows, they will still remain high in the 5% range until early next year. That being said, the inflation outlook for next year has edged down from 3.7% to 3.6%. However, the BOK says this is bound to change considering underlying economic uncertainties at home and abroad. The central bank also said GDP growth for this year will be generally consistent with August's forecast of 2.6%. But the forecast for 2023 sees a drop to 1.7% from a previous projection of 2.1%. Pundits say the BOK's projection for next year's GDP growth is not too concerning as of now, as it is still above 1%, a level regarded as economic recession. Choi Min-jung, Arirang News.